90% of traders get this wrong, and that's why they'll never become consistently profitable. You see, when trading US indices such as ES or NQ, the best trades come after a 4-hour run on liquidity. Let me explain. Because of the overall bullish trending nature of indices, price likes to travel in cycles, where in a bullish market, we see high highs and higher lows, but then liquidity comes back to seek more orders before continuing to break more structural highs. And it's after these 4-hour liquidity sweeps that we want to be looking for opportunities to get involved in the market. So we can see here on ES, price has been pushing high highs and higher lows, but it's yet to come back to take 4-hour liquidity. There is a 4-hour low resting beneath here, and inside of it for additional confluence, there is a 4-hour gap. Inefficient pricing likes to become efficient. As soon as price drives into this area, we drive down to the 15-minute time frame, where we're simply waiting for one of two things. We can either take a trade straight off of a 4-hour low, as long as that's inside the New York trading window, which this opportunity is not, or we can wait for a market structure shift, which is a change of trend on the 15-minute time frame in alignment with what the 4-hour is showing us. We can see here the next day, price starts to create higher highs and higher lows the day after a 4-hour run on liquidity. As soon as price comes back, we either enter off the 15-minute retrace candle after a sweep of liquidity, the exact same thing that's happened on the 4-hour, we want that to happen on the 15-minute, and ideally the New York session liquidates the London lows at least, or the London and the Asia lows as well, targeting structural highs as your take profit. Here is another example. When price is breaking new structural highs, it's yet to seek more 4-hour liquidity. So we wait for price to travel back into a 4-hour low. We wait for a reaction on the 15-minute time frame, and you can either take the retrace, because this is inside the New York session, and target opposing side liquidity or a minimum 2-to-1, or yet again wait for a 15-minute market structure shift and trade the following day in the same direction as that 4-hour trend. We wait for New York to open, and if New York liquidates Asia or London lows, or a newly formed low inside the London session, we can use that as our liquidity reference and entry point to target, again, structural highs. So the next time you're trading ES or NQ and you're not sure when to enter the market, simply go to the 4-hour chart, make sure it's trending and producing higher highs and higher lows. And if it's been a few days or even a few weeks since 4-hour has taken a low, wait for that area, set a trading view alert, and only look on the 15-minute or 5-minute time frame for your entry model after that 4-hour low has been swept. Save this video so you can come back to watch it later on.